With so many down payment assistance programs out there, there's one that not a lot of people know about, and that's the Chenoa program. So I'm very happy to have Kevin from Summit Funding to talk about Chenoa, because it may be the program that you need, and it's in various states. So a lot of people can take advantage of the Chenoa program. So we're going to talk all about it in this video. I'm Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. Kevin, I just want you to introduce yourself before we get into the questions.
Awesome. I'm Kevin Jefferson with Summit Funding. I'm in the Metro Atlanta area. I'm licensed in multiple states, Georgia, Alabama, Texas, Florida, North and South Carolina, Delaware, soon to be Tennessee, and Maryland.
Okay, that's great. All right, Kevin. So tell everyone what's so special about the Chenoa program.
So Chenoa is my favorite down payment assistance program. There is no additional underwriting, which typically is a gotcha when submitting an offer. Okay. If a realtor finds out that you're doing a down payment assistance and it has to go to someone else for final underwriting, that's typically a red flag. So I love that portion. The other part is there's no income restriction. If I make $200,000, I can qualify for the Chenoa program. If I want to buy, and depending on your location, if I want to buy a house at $400,000, Chenoa will give me 3.5% down payment on that house if it fits into the FHA loan limit in my area. And in Metro Atlanta, the loan limit for the counties are around 425. So you can qualify. If you're in certain parts of the country where it's less, there's still not a max based off Chenoa. It's based off your county loan limits. So I find that amazing. I think that, you don't have to be first time home buyer. I think you can also own a home. As long as you sell it before you close on Chenoa, you're good to go. So okay. There's not many down payment assistance programs that will allow for you to do those parameters.
Okay, great. And I think that's one of the major benefits that we spoke before about, is that it doesn't have the income restrictions that a lot of your state programs may have. So it gives an opportunity for people that might be, at that income limit or above that income limit to still be able to get down payment assistance.
Yes, that's key. And it's good in, I think, like 43, 46 states.
Okay, very good. All right, so Kevin, what does a buyer need to qualify? Like, what do I need to qualify for this down payment assistance program?
Got you. So Chenoa, you need to have at least a 600 credit score. They changed that this summer, which I was surprised, but they changed it to 600 credit score. You need to, depending on your credit score. Now listen, if you have a pen and paper, if you have pen and paper, get it.
I'm writing it down too. 600 credit score and
600 credit score, and you need to. You can get an approved eligible. It will get you to 3.5%, but then there are some other parameters they want. They let you use 45% of your debt to income ratio.
Okay.
You will need to have 3 months reserves.
All right, that's a good point. Okay, stop right there. What are reserves? When you say you need 3 months reserves, what is that?
If my mortgage payment is $1,000 a month, I need to have 3 months worth of that mortgage payment. So that's the equivalent of $3,000.
What about, well, I got my down payment, I got my closing costs. Will that count, or I need an additional $3,000?
You'll need an additional $3,000. Okay. But I'm gonna go even further. The $3,000 in reserves can be in your checking and savings account, or it can be in a retirement account where you can pull out $3,000. So if you can get $1,500 out of your 401k and you have $1,500 in the bank, that still helps you have your $3,000 in reserves. We just want to see that if something happens in the first 2 or 3 months, that you have reserves to where you're not going to miss mortgage payments.
Okay, good to know. So you said 600 credit score, you said a 45% debt to income ratio. I need to have 3 months in reserves. Is there anything else I need to have?
Rental history.
Okay.
If you're currently renting, they do a rental history, right? So what they'll do is they'll get the last 24 months of your rental history and they will verify it. In
Okay.
some cases, if you're living rent-free with a parent, we get a letter that says, hey, I live rent-free with XYZ, and that's sufficient for the underwriter.
Okay, very good to know. All right, so, and how much assistance generally are people getting? Is it the 3.5% for FHA? They get the entire 3.5%?
Yes, they get the entire 3.5% for FHA. Now, they do have one if you have, I believe it's a 640 credit score, where you can get 5%.
Okay, very good to know. Is the only, I know Chenoa has, I know most people, I believe, do FHA, but do they have a conventional option with Chenoa?
They do. They have a conventional component. Not many lenders use it, but there is an option for the 3% conventional.
Conventional. Okay, good to know. All right, do I have to pay this money back?
In some cases you do, in some cases you don't.
Tell me the case where I do.
The case where you do, let's go back to the example we spoke about, the $200,000. That's above the area median income, which is what they calculated off of. So you're going to be in a program, probably Rate Advantage. Rate Advantage gives you a slightly lower interest rate than the forgivable program, but the money that you borrow, let's say it's $7,000 for the down payment. They'll put that on as a second, and you will have to pay it's two options, 5 or 8% interest on that $7,000. And then after 10 years is forgiven. What do I mean? You can pay, if you move out of the house before the 10 years, it's paid back to either whether you sell or refinance. So in that, you've got a 10-year window that you need to stay, or just know that you'll be paying that $7,000 back if you leave before the 10 years is up.
Okay, now let's talk about the one where I don't have to pay it back.
All right, the one where you don't have to pay it back is the forgivable program, right? So essentially you need to make 36 on-time payments.
Okay, so 3 years.
3 years, yep,
okay.
3 years. Actually, it's 37 months because the first month you typically don't make a payment.
Right, you skip a month that first month. Okay, so 37 months of on-time payments, and then that money is forgiven.
It's forgiven. Now you have to meet the medium area income, and it varies from county to county, state to state. But if you meet that income parameter and you get an approved eligible for that particular program, which is a desktop underwriting approval, then after 36 on-time payments and 37 months of having a house, that is forgiven. And you should reach out to them to make sure you get your letter that said the loan is forgiven. So if you decide to refinance after that point or to sell, that it's not counted against you or slows up your closing.
One question I wanted to ask you was, you said that if I qualify with the income, what if my income increases after closing? Will they come back and check that, or just at the time of application, I need to meet that income?
Time of application. Okay. So time of application, you need to meet that income. To my knowledge, they don't go back and do any type of recertifications like certain programs do. Okay. So when you're on the application, that's it. And I just want to go further, right? Okay. So another great part about this program is if I'm on the application and I'm married, this particular program does not include my wife's income if she's not on the loan or application. Some down payment assistance programs require household income. This specific one is only the person on the 1003, which is the mortgage application. I think that's a huge game changer, because my wife's income may put us over the threshold of getting the down payment assistance. Or even if you have, I personally have my grandmother live with me, and they count her income because she gets Social Security and pension, that could put me over the income limit. So even though they live in a house, for Chenoa, their income is not considered, which is also a game changer.
Yeah, that is very true, because a lot of the state programs, again, they look at household income. So they want your children, that their children are living with you and they're working. They want their, bank statements and check stubs and all that kind of stuff. So that's good to know that you have one person qualify and they're only looking at that one person, not the household.
Yes, I think that's key.
Yeah, that is a game changer.
It saved a lot of deals. It saved me a lot of deals.
Good. All right. So question number 4. I know you said it'll help with the down payment. Will it help with closing costs, or do I need to make sure I have my closing costs?
The only way it helps with the closing costs is if you choose the option with 5%. So if you choose the option that gives 5% for down payment, you can use 3.5% for your down payment. You can take the other 1.5% and put towards your closing costs, and that helps you with your closing costs. Other than that, they just solely pay the 3.5% for down payment.
Okay. Now, in your experience, has the interest rate, this is question number 5, in your experience, has the interest rate on Chenoa been higher than like the market rate? Or are they going to get, something comparable to what's in the market?
Typically slightly higher than what the market is. So right now it's 3.875. Slightly higher than the market. However, depending on your credit score, you and what company you go with, your rate could be 3.875. So there's it just depends on which company you're with, but they select the interest rate.
Gotcha. Yeah, Chenoa selects the interest rate?
Yes, Chenoa selects the interest rate.
Okay, gotcha. All right. Okay, number 6. Do I have to disclose? This is very right in this market right now, at least we're in a seller's market. And like you said, we talked about sellers don't like it if you have to go through 2 underwriting processes, meaning there's a higher risk that something can happen, or it can just take longer for this person using down payment assistance to close. So do you have to disclose, like on your pre-approval letter, or do you have to tell the seller that you're using Chenoa?
That's a good question.
Okay.
Right. Most of my agents don't, because it's written in-house, underwritten in-house.
Okay.
And specifically to our company, Summit Funding, it's written specifically to whatever FHA guidelines are.
Okay.
Some companies have, even though Chenoa itself as a company writes specifically to FHA guidelines, some companies have overlays. What an overlay is an extra guideline. So whereas my company will let you go, if you got 600, go to a 45 back-end ratio, another company may say, hey, we're going to cap it at 40. That's not a Chenoa guideline. That's a ABC mortgage guideline. So specifically for our company and the other couple of companies I work with that I've done Chenoa with, we typically write to FHA guidelines. There's no additional underwriting. So as long as we line everything up with what Chenoa has, really no need to disclose, because at the end of the day, that particular program isn't going to stop the person from qualifying because they've already hit the guidelines.
Gotcha. So let me ask you again, let me be a little more clear. When I get pre-approved with you and Summit Funding, it's just going to say you're pre-approved for FHA loan?
Yes.
Okay.
Specifically for Chenoa. If I
okay.
use the different DPA program, I let them know, because then there's different parameters. But specifically for Chenoa, you'll get a pre-approval letter saying that Bob Smith is pre-approved for 225 with FHA 3.5% down.
Yeah, that's good to know. And I say that, and the reason why I'm kind of harping on that point is, so as an agent, sometimes people looking at down payment assistance offers, they're like, oh, that's in the no pile. If they have multiple offers, that does happen.
Yep, it does. Yeah. It does.
Okay, so I want to make sure that with your company, it's not going to be on there, just the FHA and what they're pre-approved for. That's good to know. How long, I guess it's around the same line, the closing, so it's no longer to close with Chenoa than just regular standard FHA. How quickly can you close?
So typically I've been telling people 30 days. Okay. We're built to close a little bit faster, but we can control everything in the process except for the appraisals, which some come back earlier, some come back later. So I just say get 30 days. If we can close sooner, then we will.
Okay, good to know. All right, I think you already kind of answered this. This is question number 7. Do you think Chenoa is a better option than some of the state down payment assistance programs? And you kind of answered that already.
Yeah, I do. I just think that the rate's higher, yes, but the other things that allow for families to get into a property, I'd take the higher rate any day.
Okay, good to know. All right, so question number 8. Who should I go to first? Should I go to a realtor like me about Chenoa, or should I go to you first to make sure I qualify for Chenoa?
In a perfect world, they should come to the lender first. So they have their pre-approval in hand. They know what program, they know how much money they'll need. And then that when they have their buyer's consultation with the agent, they can say, I've got Shaheedah, I've got my pre-approval letter. And then you can kind of go over with them and say, hey, I see that your lender provides you with estimated funds to close, but these items are not included in those numbers. The escrow, the home inspection, the appraisal. Right. So that allows for you to expedite the process because we're not waiting to see if the buyer can get pre-approved. They're coming to you pre-approved.
Good to know. Let me ask you this. So if I come to you and I'm really interested in Chenoa, but I'm not sure, maybe conventional might be better for me, or maybe just standard FHA will be better for me because I do have some money. Because a lot of people come, they have the money, but they may not want to spend it. They don't want to use all of their, money, all of their savings for their down payment, closing costs. So they're thinking, okay, I might use Chenoa, I might not. Will you be able to compare and let them know, okay, if you did standard FHA, this is what that would look like for you. If you did Chenoa, this is what Chenoa is going to look like.
Yes. So when I pre-approve a person, I look at all programs that they qualify for, whether Chenoa, FHA, VA, USDA, bank statement loan, whatever. I see which ones they qualify for. And then I give them the option of, okay, this is what you qualify for. This is how much you qualify with Chenoa, how much you qualify with FHA, how much you qualify with VA. And then I just give them all their options. Because at the end of the day, I've gotten clients that come to me where they specifically wanted USDA. That lender tried to pre-approve them for USDA and they couldn't get pre-approved, but they never said, but you can get approved for FHA. And when they came to me, I said, I can't do USDA for this reason, but FHA, and I end up using Chenoa on some of those people.
Mm-hmm. And that's good to know because, like I said, a lot of lenders don't go the extra mile. They're like, I want to use USDA, and you don't qualify, and they just leave, but they don't know their other options. So it's really important that it's really good that you go through that with them and say, okay, these are your other options.
Yep.
All right. So I think we've answered everything about the Chenoa program to at least get them started. I'll put some links below to Kevin. Kevin, tell them how they can reach you.
So you can reach me at 470-485-6267. My email address is kevin.summitfunding.net. Not .com, but .net. If it goes to .com, I'm not sure where it's going to end up. So it's .net. You can also reach me on Instagram at The People's Lender, and I'm on Facebook as Kevin Jefferson.
Very good. And we'll put all of that information in the description, also with a link to Chenoa so you can learn a little bit more. You have to go through a Chenoa approved lender to get the program. You can't just go straight to Chenoa. Am I correct?
Correct.
Okay. So you have to go through Kevin. If Kevin lists in most of the states that he works with. If he's not in your state, I'm sure he can probably give you a referral to somebody in your state that does Chenoa.
Yes, I can.
Okay. So thank you so much. I think it's going to be a great program to a lot of first-time home buyers, not even first-time home buyers. Like you said, they don't have to be first-time home buyers, but this program is going to be good for a lot of people that can't take advantage of other programs, or especially people compare it to NACA, not having to go through all the NACA, programs and counselors and all that kind of stuff. So this may be another option for a lot of people.
Yes.
All right. Thank you so much, Kevin. I appreciate it.
No problem. Thank you.